All right, so today was another banger day. As y'all know, yesterday's trade I talked to y'all guys about. I was being a little bit too lazy in the markets. I wasn't waking up on time, or I was going to sleep while these trades were playing out. And today, I took the responsibility and I got up and I actually got up earlier than usual. So I got up at 9:20. I usually get up at 9:30 and start trading. So I got up right before 10 minutes before market opens, and that's really all I feel like I need. And let me break it down because we had earnings on AMD, but I didn't even know that. I did not even know we had earnings, and I still ended up managing to trade and hit my trade because earnings and news and stuff like that. It does play a little bit of a role, but it doesn't move the needle when it comes to me. And for my strategy, what moves the needle are these three things right here, the three criteria that I use to enter a trade. And I used all of these for the trade that I took today, and today was actually a $332 trade. And as you can see, it was right here. This is the trade that I took, and of course, it ended up dropping and just going ballistic, or it ended up just tanking honestly to the downside. Which this probably would have, if I would have held this, it probably would have been probably like a $2,000 trade. And I wasn't even risking a lot. I was not risking a lot. So let me actually show you guys how this trade played out, why I took it, and everything that y'all guys need to know. Okay. So as y'all guys know, if y'all haven't watched any of my videos in the past, I like to trade simple. So in this case, I'm looking for three things. So the first thing that I'm looking for when I look at the markets at 9:20, 10 minutes before the markets open, is what direction structure is going in. So as you can obviously tell, structure is bullish on the 5 minute. As you can tell, structure is bullish. So let me change this to another color so it looks a little bit more, so y'all guys can see. Let's go like that. Okay, so as y'all guys can tell, market structure is obviously bullish right here. We have the high, we have the low, we have the high, we have the low, we have the high. Okay, what was the last low that created this high? This one right here. So this right here is the last low. So if we break this low, then this would be considered a change of character. So that's what I'm going to put right here. I'm going to put a change of character or a market structure shift. Let's put a market structure shift. Okay. So right here is a market structure shift. Okay. If it breaks this. And as you can obviously tell, what happened right at 9:25, we broke this. And I know what people might be saying. Hold up, this looks like a wick, a fake out, whatever. Okay, that's good, but remember, for me, there are times where stuff like this is still considered a change of character. It just depends on how the markets react after this change of character. So yes, there's going to be times where stuff like this ends up being a fake out, and there's going to be times where it doesn't and it actually works. And in this case, it actually worked. So it's really circumstantial. Every single situation is different. If you want to be a little bit more patient when it comes to this, then you can do that. If you don't, if you just want to enter right off the rip, then you can do that. But for me, I was a little bit more patient because I know that this could have just easily been a fake out to continue to go higher, right? So but once we had that, I understood this was a market structure shift. And then we had the next thing that I was looking for, which was a supply zone, because since the market is bearish and gave us that market structure shift, then I understand that we were bullish and now we're shifting to bearish, so I have to look for supply zone. So obviously right here we already have structure identified, which structure is bullish in this case. So let's put that check. And then we have a valid supply zone. So this is a valid supply zone because this candlestick was the cause of this whole move, which this candlestick caused this to actually have a market structure shift. So that's valid right there. And then now the last piece of the puzzle is going to be the entry. As you can obviously tell, look how close this was to actually breaking this zone. And I think if we really zoom into this, it did break it. But that's why I was extra patient, because in these situations like this was like right at market open, like at 9:30. I am not a big fan of trading right at market opens because there's a lot of volatility. So I had to be patient, and that's exactly what I did. And even though I was patient, I knew that I could have missed out on this trade. This trade could have left without me. But that's just a part of the game. You know what I'm saying? Like, you can't let that bother you. You can't let missing out on trades because you were trying to be a little bit patient and wait for that affect you. I get it if you were being a bitch and you didn't take this trade because you're scared. But if, like me, deep down inside, I knew if this trade left without me, it wasn't because I was scared. It was simply because I was being patient, because look at how close this actually was to actually breaking this zone. But as you can tell, it actually ended up coming back up into here and rejecting perfectly. Now, my entry model, though, as I was going to explain, was actually on the 1 minute. So I use a 1 minute a lot of the times for my entry models, because the 5 minute, if I waited for the 5 minute to close, look at this. This shit would have been horrible. Like I would have entered right down here, and I probably would have gotten stopped out. So that's why I use the 1 minute as my entry model. But I use the 1 minute as my entry model. That is it. You know what I'm saying? That is it. So let's look at this, because I'm not looking at the 1 minute for to identify structure and all that shit. Like it's too complex. I'm not trying to go and give myself a headache. But as you can obviously tell, right here is where I entered off of. So market came up, actually market opened right here, and then it ended up dropping, and then reversing very quickly. And then what ended up happening was we ended up just reversing from this. So it looked like it was about to break this zone. And I actually thought this zone was going to get broken, and it was going to do something like this. But no, that wasn't actually the case. It ended up just reversing. And this candlestick right here gave me a good indication that this wanted to drop. Like this candlestick right here gave me the best indication that it wanted to drop. Okay. This one right here, because look at how these candlesticks reacted. So we had this candlestick, which looked like it wasn't a strong bullish candlestick. This one was, but then we got reversed with this very, very bearish candlestick inside of a valid supply zone. So this candlestick right here gave me that indication. So what did I do? I entered off of a rejection entry. So that's what this is called, a rejection entry. I enter based off of the how the candlestick rejects off of that specific zone. I didn't wait for it to close, because this could have honestly just left without me. But I just waited for it to just give me a good rejection. And once it gave me that good rejection, that's where I entered this trade. Now, the risky thing about this is that if you know anything about how I manage my risk, I have a dollar amount. So as of now, in this on this trade, I was risking $100. Because I went a little heavier with the contracts. I bought 4 contracts, so I went a little heavier. I usually buy 3, but for this one, I bought 4. And I was planning to risk something like this, but this was just horrible risk, because by the time we were up here, it was about like 50 already. So I was like, okay, I'm probably going to risk 100. So 100 would have been where I had it at, like right there, wherever I just had it at. That was like where 100 was at, where I was calculating where 100 was at. Um, but as you can obviously tell, it wasn't the best entry, because the best entry would have been right here. But that's something that I just would want to tell you. You can't always get the best entry. So don't always try to like think you're going to get the best entry, or don't always try to get the best entry. It's better if you catch something than if you don't. So even if I was risking, let's say I was to risk 100, or I was like, my max tolerance would have been 50, and this would have done something like this, and then it would have just came down right after, I would have been okay with that. Like I would have, honestly, I would have been okay with this. Like I really would have been okay with this, even if it just stopped me out. Because what's more important than being right is not following your rules, but not risking more than you were intending to risk. Because I can catch a trade like this anytime. Like anytime I understand I can catch a trade like this at any time that I want to. So that's not a problem for me. I'm not worried about not being able to catch another banger trade like this, because the trade that I showed you guys yesterday was a banger just like this. I didn't catch it, of course, because I was sleeping. It was a video that I talked about yesterday. But the thing is that, think about it. A banger trade yesterday, a banger trade today. I know, like, I'm confident that I can catch these banger ass trades. So that's not something I'm worried about. So if I missed out on this, it's not something that I'm worried about. Or if I'm like, the only reason I used to risk more was because I was afraid that I wasn't going to be able to catch a banger trade. But now I'm not afraid, because I've been trading more, and I've been practicing this strategy more and more and more, and I've been able to identify these. So I'm confident that I can catch these. So it's all about being confident. So if we tapped into here, and let's say I was at negative 50 or negative 100, whatever my max tolerance is, I would have gotten out. I would have minded, and I wouldn't have cared if this did something like this. I wouldn't have cared, honestly, because I know I can catch another trade like this tomorrow, next week, whenever I look at the markets again. So that's not a big problem for me. But in this case, you have to be very wise, or not wise, but you have to be smart when it comes to your risk management. I would always say have a technical stop loss. So this is called a technical stop loss right here. This is like your technical stop loss. But you also want to have like I forgot what I was calling it. A dollar amount. So a dollar amount stop loss. So a dollar stop loss. So a dollar stop loss for real basically is like how much you're willing to risk the dollar amount. So in this case, let's just say for me it was 50 or 100. Let's just say for you it was 50. So in this case, $50. This is my technical stop, but I know if the price gets to here, then that shit's gonna be $100. But I know if price gets here, that's $50. So although my technical stop is up here, I know I have to get out right here because this is my um dollar amount that I'm actually planning to risk. So that's what I usually do when it comes to the risk management part. And then my price target, this was my price target right here because we had this right here, like the last low. So this was my price target, and I ended up getting out right there, and it was a pretty good trade. Like I'm not gonna lie, it was a pretty good trade, very simple, fast trade. Didn't take too long, and it played out. Like it really did play out. So what I would tell you guys is that it's all about just understanding the three things that you look for. And for me, those three things are going to be, I don't know where it's at. So in this case, like I said, I always say this: the three things were market structure, supply zone, a supply and demand, and entry model. And I broke down how I looked for all of these step by step. So and I'm more of a simple trader. Like I'm not a trader who is going to sit on here and talk about charts or go over my trade or keep up with news and what people are talking about and the economy and shit like that. I'm more focused on following my rules, such as market structure, supply and demand, and entry model, and just executing off of that. Like that's really what I'm looking for. And I'm only trading one stock, AMD, because I get good at understanding how AMD moves, how it rejects off of these specific zones that I have. I've tested out multiple stocks. Like I've tested out Nvidia, I've tested out Spy, I've tested out QQQ, Apple. I've tested out multiple stocks, and I've even tested them out. Like I was testing them out, but I've traded them before. And AMD, I found that I had the best win rate, and it respected my zones and my strategy the most out of all of them. So that's why I stuck to AMD instead of looking at AMD and then QQQ and then SPY, and then I miss out on SPY, and then I go back to AMD and I see that there's a good trade and then I take it, but it's not the trade that I wanted to. So I only stick to one stock and I trade three systems. And that's why I like to target, and I'm making these videos mainly for people who like to trade simple. If you are a simple trader, I always say this in all my videos: keep a simple playbook just like this. If you don't like looking at too many charts, if you don't like looking at multiple screens, if you don't like back testing, obviously if you're lazy, that's a different story. But if back testing doesn't really benefit you, or journaling doesn't really benefit you, because I used to journal every day. I used to have all the apps, TradeZella, Notion, all of that, and I was consistent. It wasn't like I wasn't consistent, but I never reviewed them. I didn't care about it. Like that never really moved the needle for me. Looking at all of that and having all that data actually gave me more pressure. So I had to realize all of this like on my own, and I had to realize, okay, what is the best way to trade for me? Not for everybody else, and not all these gurus or not all these people I see online, but what's the best way and best strategy that I like to trade? So I tested out multiple strategies. I would be a scalper. I would be, kind of like a swing trader where I hold trades longer. And I found that using this strategy right here worked best for me. Like this shit worked best for me because it kind of aligned with my strategy. Like I'm more of a simple trader, a sniper trader, where I have a setup. So this is my setup right here, and I wait for price to tap into that setup, and then I wait for an entry model to play out, and then I execute. Like that's literally it. So when I wake up in the morning, why I don't need a fucking like 5 hour pre-market prep is because I understand how to look at structure, how to read structure, or what I'm looking for. I understand what zones I'm looking for, the valid supply and demand zones, and then I understand my entry models. I understand my entry models. So when I go off of these three things, then it's very easy because I've understand and I've mastered all three things for this one stock. So that's why I understand this. And then also the risk management. there'll be days where I'm like, okay, I'm only planning, or there'll be weeks, not days. There'll be weeks where I'm only planning to risk $50. Some other days I'm planning to risk $100. It just depends on the contracts and how big the position is. The bigger the position, obviously I'm gonna have to risk more, but I can obviously make more. And then the smaller positions, I'm gonna risk less, and I know I can make less. So that's basically how I go about it. And having these simple like strategies and game plans is very simple, because like you can get overwhelmed with all the trading shit that you see online, especially when you really are trying to get locked into trading and stuff like that. And that can really like confuse you and overcomplicate things, when in reality, like in simple reality, bro, like at the end of the day, if you're somebody who likes simplicity, you're a minimalist, trading simple like this, something like, you don't even have to copy my game plan and how I trade, but you can antiquate it to how you like it. Maybe you like to trade breakouts, so you can look at market structure, breakouts, and then a confirmation on, using one of your indicators, something like that, right? But understanding your personality, I'm not gonna lie, it goes a long way. It really does go a long way, because beforehand I was copying, like I'm telling you, like I'm being real. Like I spent like $3,000 on a fucking course, or not on a course, but on a mentorship. And this motherfucker was like, yo, it's this easy. All you got to do is this, and all you got to do is this. And I was looking for like five things before I even took a trade. And that would complicate shit, because I'm like, okay, market structure and the entry model is good, but the liquidity isn't there. The fucking breakout isn't there. The this isn't there. So I'm not going to take it. And then the trade would actually end up going my way. And it was shit like that. And then I would ask my mentor, and this motherfucker would be on some bullshit, with a vague ass answer. Oh, did you check time frame? And I'm like, yeah, I did. I don't know. I still ended up taking a loss. And then he wouldn't answer my ass. So I'm like, bro, what the fuck? You know what I'm saying? So um I would say the main thing, and the thing that I learned from that is everybody's different and everybody trades differently. It's all about how what your personality is really what's gonna move the needle when it comes to this trading shit. Like that's what really moved the needle for me, and understanding, like, at the end of the day, what is fucking you up the most. Like for me, what was fucking me up the most, honestly, was I was trading because I was trying to flip my account, because I wanted to quit my job, and I said this in my previous videos. But then once I quit my job, because I'm running a web design agency on the side as well, and that was making me money, and I quit. I wasn't dependent on trading to flip my account and to make money and to quit my job. Now I started trading from a place of like just calm and chill. You know what I'm saying? And yeah, so some of y'all guys might be in that position as well. You're probably taking a lot of dumb trades because you're trying to make money so you can flex on your friends, or you can post it on social media, or you can do all this bullshit. But at the end of the day, ask yourself, like, should I continue to do this? Is it worth not making any money? Or is it worth not being consistent? Because if you really just cut that shit off for that specific reason, I'm telling you, you are probably gonna start trading better. But yeah, man, like this video, like a lot of my videos are really just for simple traders, people who like to trade simple, who like to keep it simple, who don't like to overcomplicate things. Like I said before in my past and in other videos, but I'm gonna keep reiterating it because I might have new viewers. Um, more isn't always better, and the less stuff you need, the better. You know what I'm saying? You might see people talk about how they've made so much money in the markets, but remember, everybody's fucking different. Everybody's different. This person might have used a whole bunch of monitors and brokers and different type of strategies and shit, and he might have been successful. But at the end of the day, remember, he probably has a different type of personality than you do. You probably are somebody who likes to trade simple, likes to keep it very clean and minimal. While this other dude has a whole bunch of fucking um, indicators and all this complicated shit on his screens. So yeah, I mean, I don't know, man. I kind of went on a tangent like I always do, but like I really like talking about this because, bro, I was in that position, bro. Like I was fucking losing money every single week because I thought that, more was better. But when I started simplifying shit and it was just stuff like this, bro, it just became so much easier, bro. So much easier. Like I'm not even like yesterday, I missed out on a trade. Did I care? Hell nah. I did not care that I missed out on a trade yesterday. I came into the markets today with a whole new, like, just thinking about today and looking for these three things. So it's very simple, but um if you like the video, leave a like, of course, and then comment what you think. And yeah, subscribe and do all that good shit, bro. I would say like the video though, and subscribe. And if you fucking with me, bro, keep fucking with me. And if you're not, then start fucking with me. All right, because I'm gonna be posting way more. So other than that, that is basically it, and I'll see you on the next one.